Good evening, everyone. On behalf of KRChoksey Research, we welcome you all for the Q1 FY2021 conference call of Deepak Fertilisers and Petrochemicals Corporation Limited. I take this opportunity to welcome the management of Deepak Fertilisers and Petrochemicals Corporation, represented by Mr. Sailesh Mehta, Chairman and Managing Director, Mr. Amitabh Bhargava, President and Chief Financial Officer, Mr. Mahesh Girdhar, President and Crop Nutrition Business, and Mr. Deepak Balwani, Head Investor Relations. So we will begin the call with a brief overview by the management, followed by the Q&A. I now hand over the call to Mr. S.C. Mehta, Chairman and Managing Director, for his opening remarks. Thank you, and over to you, sir.
Thank you. Very good afternoon to all of you. I hope my voice is clear. Deepak, my voice is coming out clear?
Yes, sir, you're audible.
Okay, good. So I hope all of you and your families are all in good health, and that all of us are hanging on during this lifting lockdown and the uncertainty. And I'm sure all of us will come out stronger and better as we come out of this crisis. I trust that all the details of the Q1 results have already been received by each one of you. So what I'm going to do is somewhere share with you behind the figures and beyond the figures, how do we see the situation that emerged in Q1. And of course, then post that, Amitabh will take you through all the details of the figures and then clarify any questions that you may have. So as far as the COVID safety measures goes, we went on a complete overdrive to make sure that we kickstart temperature checks, oxygen level checks, face masks, social distancing, disinfecting tunnels as people entered at various places in the plant, hot salt water gargle spaces, and also very strong vigilance through the CCTV cameras, particularly where there could be possible little congregation of people. Despite that, we have had a few positive COVID cases, but they have all been asymptomatic. And, which has perplexed us that with all the checks, what more can we do? And we had even 3 government committees visit us, and they were extremely happy with the COVID care that we are taking at the plant. And they said, well, this is the best we can do. Now, as far as the business goes, basically we were happy that we could convince the government that all our products do fall into the essential commodities and are required. Fertilizers, of course, for the farmers, the technical ammonium nitrate for the coal sector, and also in terms of IPA, of course, for the hand sanitizer, and some of the assets also where our downstream customers had shared that these are essential commodities. So virtually we were back in production, maybe within a few days of the COVID declaration. However, we did suffer ups and downs because of the supply chain disruption. Somewhere truck drivers are not showing up, Mathadis on and off. Having said that, if I were to share from each business perspective, as far as the industrial chemicals business goes, IP, of course, was a great show, and I'll tell you more about it. But as far as the assets goes, while the CNA segment did well, on the weak nitric acid, there was a sufferance at the downstream, where a lot of our customers were suffering the lockdown conditions. Then, as far as technical ammonium nitrate goes, while Coal India, because of the overburden removal, that market segment did quite good. But On the other hand, cement limestone was very, very dull. And, because cement sales had virtually come to a standstill. Of course, things are much better now. Similarly, in the infrastructure sector, we noticed that the percolation of the central government's funds to the state government and the state government's funding to the infra project somewhere, was stuck. And again, things are better now, but the Q1 saw, a lull period for that. Then in case of the fertilizer business, of course, the going was very good with the water levels right from last Rabi, and then the rains coming in good time. It has been brisk. So while IPA did bring the magic touch to the Q1, in a sense, just to give the perspective, it contributed roughly around 40% to the Q1 contribution. TAN was the other 40%. And fertilizer, which I feel is the real story there, moved from -8 to +16%. And all in all, and of course, even on the raw material side, gas prices were rather soft, and we are seeing for a long term also that gas prices will remain soft, which is a good story for us, for our projects and other things. But all in all, the profits have shot up 11 times in comparison to last year. Of course, last year, as you recall, was a very, very tough year. I mean, all kinds of challenges that were there. But indeed, it was the best quarter ever, including the highest collection, which could help us, combat, all our short-term loans and all that, and bring in a real good strength. Now, from a fundamental perspective, as I look at it, and if I look at the fundamentals at a macro level, which are going to be impacting us. One aspect that we are noticing is that higher hygiene levels certainly seem to be the new normal. And from that perspective, the consciousness of a lot of these aspects are going to stay with us for a much longer period. As far as on the fertilizer agriculture front, we were very pleased with our transformative announcement of the new agriculture policy, where the government came up with a path-breaking kind of, a policy change. And we are seeing it's a very positive impact on fruits and vegetables, FPOs, contract farming. And that in the longer run will also have its very positive effects on fertilizers. And similarly, at the macro level, the government came out with a very good, I would say, policy on commercial mining, opening up that sector. And that also in the longer run, we see a very positive effect as regards our TAN project and TAN business itself. At the fundamental level, at the micro level, that is for the company, what we see is this positive traction on IPA continuing, and for us, our move from IPA to hand sanitizers and to other B2C products is something which, we feel should be in the right direction and should find not only a better traction, but a good value addition to IPA over a period. Fertilizer side, we are very clearly seeing that this shift that we made from commodity NPKs to high-tech crop-specific NPKs, and the journey from customers to consumers, that is from the dealer segment to a very strong focus on the farmer segment, the farmer level. Those we are seeing as aspects which will fundamentally impact and bring strength and unique, I would say, competitive strength in the fertilizer business. And similarly, the fundamental change we are trying to bring at the micro level in the TAN business, in the technical ammonium nitrate business, where we are bringing in a new drive to move from product to total mining solution. That also we see as taking us to a value-added area and somewhere where we could be climbing the value chain as well as looking at margins and somewhere creating entry barriers. So all in all, we are seeing this quarter in a sense as, I would say opening up of somewhere the good days to come. And somewhere each of the three sectors taking a more of a strategic turn into what we had worked out as our long-term plan. So more details and the specific figures of Q1, I will allow Amitabh, our CFO, to share with you. Amitabh?
Yes, thank you very much. And let me take everyone through the broad numbers. Good afternoon, everyone, and thank you for joining the Deepak Fertilizer and Petrochemicals conference call to discuss the Q1 FY2021 results. During the quarter ending June 2020, despite COVID-19 pandemic, being most of the DFPCL products being essential commodities, the company continued its operation with some intermittent disruptions during the period of lockdown, as Chairman also briefed a little earlier. During the Q1 FY21, we reported total revenue growth of 23% YOY to rupees 1,382 crores. Operating EBITDA increased by 128% YOY to rupees 272.2 crores. Operating margins increased to 19.7% in Q1 FY21 as compared to 10.7% in Q1 FY20. Significant improvement in profitability was driven by improved fertilizer business performance, increasing demand for IPA along with lower cost of major raw materials. And net profits increased over 11 times YOY to rupees 121 crores in Q1 FY21. In chemical segment, manufactured chemicals chemical business reported revenue of rupees 634 crores in Q1 FY21. Our IPA revenues increased by 178% YOY to rupees 196 crores in Q1 FY21. IPA sales volumes increased by about 49% YOY, and improved margins were driven by an, as you would know, unprecedented surge in IPA demand on the back of the increased awareness of use of IPA in hand sanitizers and disinfectants, along with the increase in international IPA prices. However, our TAN revenues decreased by 23% YOY to rupees 253 crores. The lockdown had severely impacted demand and consumption of ammonium nitrate in India. TAN solid volumes were lower by 11% and melt volumes were lower by 48% YOY. LDAN sales volumes in Q1 FY21 were lower by 52%, mainly due to liquidity issues and stalled large-scale infrastructure projects due to COVID-19 lockdown. LDAN sales volumes also dropped due to stoppage of production in the cement plants across India. Acid revenues decreased by 33% YOY to rupees 86 crores in Q1 FY21. Citric acid demand faced challenges due to shutdown and low capacity utilization of our downstream customers due to, again, the COVID-19 situation. Chemical trading business was at rupees 150 crores in Q1 FY21, up by 42.6% YOY. Strong demand for IPA resulted into the higher trading revenue in Q1. Though as such, the volumes, we maintained our volumes at similar levels that we were clocking earlier before Q1. Fertilizer segment delivered third consecutive profitable quarter Manufactured fertilizers reported revenue increase by 41% YOY to rupees 479 crores in Q1 FY21. Sales volumes of NP increased by 59% YOY and NPK volumes increased by 46% YOY. Fertilizer trading business increased by 113% to rupees 117 crores in Q1 FY21. Overall margins improved significantly due to good kharif projections by IMD and timely arrival of monsoon in core command area, along with higher smart tech in product mix with higher net sales price. During the quarter, the company continued its journey to move from commodity to specialty and accordingly moved almost the entire 100% volume to smart tech, and also launched differentiated bentonite sulfur variant that is Bensul Superfast. Bensul Superfast is being manufactured at our Taloja plant. With extensive farmer and channel connect through digital marketing initiatives, the company was able to connect with over 7,000 dealers and retailers through digital meetings during the quarter. While contribution of fertilizer segment in total revenue has been in the range of 35 to 45% since last few quarters, its contribution in the segment profit improved from -8% in Q1 FY20 to now 16% in Q1 FY21. With gradual improvement in profitability of fertilizer segment, the quality of profit mix is improving quarter on quarter. Counting on strong start of the year, we are confident of attaining our business goals and maximizing shareholders' wealth, and very optimistic about the coming quarters going forward.